I'm Sarah Borgeson-Keto, and welcome to this month's quick study of the REIT market. I'm here with Brad Case, NAREIT Senior Vice President for Research and Industry Information. So Brad, REITs had a strong first half, but then they pulled back a bit in July. What factors were at play last month?
Well, in July, I think investors were a little bit concerned about the state of the macroeconomy and whether the Federal Reserve might get ahead of the macroeconomic growth picture in allowing interest rates to rise. But actually, REITs didn't really pull back during July. The month of July as a whole was a flat month for REITs. It was a poor month for the rest of the stock market. The S&P 500 was down 1.4%. So what you saw was REITs outperformed the broad market during the month of July, and that's certainly been true for the entire first part of this year. The stock market has been up less than 6%. The REIT market has been up well over 16%. Part of that probably has to do with the fact that the stock market outperformed the REIT market during 2013. And of course, one of the great things about investing in REITs for most investors is the diversification benefit. The fact that the same set of economic news will have a different effect on the real estate market and therefore on REIT stock returns than it will have on the rest of the stock market.
And were there any particular sectors that you were watching in July?
Well, if you look at the strongest performing sectors of the REIT market during July, they were infrastructure REITs, which were up nearly 3% on the month, and residential REITs up more than 2.4% on the month. When you look at what investors are responding to, it's information about construction patterns and growth in demand. So, for example, if you look at the residential REIT market, I think you're seeing both of those at play. One of the things that came out during July was an increase in the number of new renter households being formed. We do expect that to continue because the number of new households has been well below average for the last really 8 years. And so we've been expecting the number of renter households to increase. And we did see that during July, and that, of course, investors regard as good news for the future of residential REIT earnings. And in fact, residential REITs have been the strongest performer during 2014 to date. They're up more than 26%. So that's been very good news. The other part of the story there is not just the growth in demand going forward, but the fact that residential construction has been lower. And in fact, if you look at the weakest performing sector of the REIT market during the month of July, it was timber REITs. So what investors are saying is we expect there to be continued slow growth in the number of new rental units being constructed, and also continued growth in the number in the owner-occupied housing market. And that, of course, they think is good news for residential REITs, not such good news for timber REITs. A lot of it, keep in mind though, is just getting back to a normal situation. Timber REITs were the best performing sector for some time. Residential REITs were the worst performing sector for some time. So to some extent, the sectors are just getting back into balance.
And looking ahead for the rest of the year, how well positioned are REITs at this moment?
As usual, the story in the last couple of years in the market has been the pace of macroeconomic growth and sort of certainty among investors that the growth is going to continue, because that will increase demand for all types of property. Increases in office employment, are increasing demand for office space, and therefore the demand for the products that office REITs provide. Same thing with retail space. Same thing with essentially every other sector of the REIT market. And so investors are going to look for news that shows them that the macroeconomic growth is continuing. And when we see that, then investors aren't worried about interest rates going up. Generally speaking, when interest rates go up, it's because the macroeconomic situation is strengthening, and that increases the demand for investor capital. And that's why investors are much more concerned about the macroeconomic growth situation than about the interest rate situation. If interest rates go up because growth is quickening, then that's good for real estate investors, because it means there's greater demand for real estate space. What investors have been concerned about for more than the last year is the concern that the interest rates may go up without the commensurate increase in the macroeconomic signs. And so I think what investors are going to look for the rest of the year is the macroeconomic situation, and I do expect it to continue to improve.
Thank you, Brad.
My pleasure.
And for more news and analysis on all things REIT, be sure to visit REIT.com.